Hey everyone, good morning. How are you all doing? I hope great. Well, thank you for joining this morning for this presentation. Um, so in this presentation, I will be providing you with insights on our investment journey and our portfolio performance. And the presentation will be structured as followed. In the first part of the presentation, I will be basically talking about all the steps we took and how we selected our stock, what were the initial analysis we make in order to start investing. In the second part, I will be discussing about how our portfolio did between 2017 and 2019, the first 3 years, what were the strategy and the market condition and how did we overcome those challenges. And in the next section, I will also be talking about like some economic prediction that we did for the upcoming 3 years from 2020 to 2022. There will also be a Q&A session in this presentation where I will be happy to kind of answer any question or concerns that you might have. So that being said, let's go straight into it. So the primary objective of our fund is to kind of achieve a superior risk return by kind of diversifying our portfolio across like different industries. We focus on investing essentially on the New York Stock Exchange. So our initial investment strategy basically was to adopt a mixed approach and have a proactive risk management and adjusting strategy in order to be able to respond to market conditions and any kind of economic changes that may that has happened during our investment journey. Moving on to the next slide. So the main objective of our portfolio, first of all, is capital appreciation. Obviously, we want to be able to achieve a long-term capital appreciation and growth, and we plan to initially outperform our benchmark, and our benchmark was the S&P 500 index. Our also second goal of our investment is to kind of be able to maintain a proactive management and risk adjustment strategy in order to efficiently and effectively respond to market conditions and changes. And the third goal in our investment journey was to kind of be able to kind of sustain a certain stable income by also diversifying our investment through like selecting dividends-based stock and investing in industry like real estate, where we were leaning toward a more stable income. Moving on to the next slide, I will be talking here about our investment journey. So everything started in 2016, where we kind of conducted a lot of research, including market analysis, to be able to identify key opportunities and challenges in the investment market. We also kind of look into how we were going to select stock for our investment. We plan every cases and scenarios based on our prediction and our analysis. We also develop our weighting strategy, how we were going to kind of distribute our initial investment amount across different sectors and the stock we selected. We also focus on developing a rebalancing strategy, how we were going to kind of like tackle any challenges that might have happened during an investment period, and how we were going to kind of rebalance our portfolio. So moving on this, in 2017, after raising the initial amounts for our investment, we distributed those 100 million across 11 industry from the GIG sectors. We decided it was very important for us to diversify our portfolio in order to kind of ensure higher return and more flexibility. In the second quarter of 2017, we were still new on the market, like market entry. So we were able to kind of do some analysis on how our portfolio was performing and kind of adjust accordingly to the event that were happening at that time, including the Brexit, the US presidential election, and also how to tackle different volatility level that we were seeing across different industry. And in 2018 also, we kind of like rebalance our portfolio and we optimize based on the performance from 2017. We also kind of did like a rotations across like different industry, where we were able to kind of sell some of our least performing stock and kind of re-inject the capital into the most performing sectors. Moving on in this presentation, and 2019. So in 2019, it's important to notice that at the end of 2018, when we did our adjustment and rebalancing strategy for 2019, we kind of decided to wait a bit till the end of the first quarter to see how our stock were performing at that specific period. And we decided, and also with a lot of speculation and the surge of COVID-19 in 2020, so we kind of in 2019 first, we kind of adjust our portfolio based on market conditions that we were seeing. So we did 2 rebalancing on our portfolio in the middle of 2019, and at the end of 2019 we also reported our performance, and we were already hearing speculation about a potential pandemic that were going to spread all over the world. However, we didn't take any action in this regard, any drastic action. We decided to kind of like keep our stock as we kind of rebalance at the end of every year, and we decided to kind of observe how the market was behaving until the end of the first quarter and at the beginning of the second quarter, which was like already 2020, when the COVID was increasing in certain part of the world. So we started like developing strategy on how to mitigate the impact of the COVID-19 on our investment. And we also started looking at how our stock was performing and doing some analysis on the healthcare sector in order to kind of identify any opportunity that we could have captured and that we had to capture at that specific moment. So we rebalanced our portfolio and we sold some of our stock. We allocated more investment into the healthcare sector to take advantage of the opportunity that the pandemic was presenting. We also kind of allocated a higher percentage of our investment into the technology sector based on some market analysis and prediction that we made. And then moving on to, by the end of 2020, we were able to kind of report our portfolio performance and hold a meeting with the investors, with you guys, if you remember, to kind of update you on how our portfolio did in the first year of the pandemic, 2020. And we also presented to you guys with some of the analysis and prediction that we had for the next year, 2021. If you guys recall. And then moving on to July 2020, moving on to 2021, we decided to observe how our new rebalancing strategy that's happened in 2020 were performing at the first half of 2021. And then we did another adjustment in July 2021 to kind of based on the analysis that we did on how different industries were performing amidst the pandemic, and what were the opportunity that emerged, and were the challenge that could have happened in the future. And still moving on into what I was saying before we got a bit of problem of technical issues. We also did another adjustment on our portfolio based on market trends that we identify at that specific moment. And at the end of 2022, which is now, the whole month of December, we were just focused on kind of reporting, creating report, and on how to inform you guys how our performance, our portfolio did, and also making this meeting happen. Yeah. Moving on to the next part into this presentation, I will be talking about how our portfolio performed during the first 3 years, which is 2017 to 2019. On the next slide, if you look at those graphs, on the right side, you can see how we initially distributed our initial investment capital across different industries based on our market analysis that we did in 2016. And if you look at the left side, you can see our portfolio return compared to our benchmark, the S&P 500 index. The first quarter of 2017, the market was really tight with some events like high unemployment rate in US, and also kind of some political tension, and we also have the presidential elections, and also the Brexit. All those events were kind of impacting how some of the sector perform. However, the average monthly return for 2017 was around 37.17%, and when we compare to our benchmark, which is around 27.15%, so our portfolio kind of did well compared to our benchmark, and the average volatility level was around 79. After 2017, at the end of this 2017, we also decided, as usually, to kind of review our investment strategy and what were the potential area or that we could have improved, and the new opportunity that we identify in the market. So for our investment strategy of 2018, we decided to reweight and to rotate the distribution of our capital across different industry, as you can see on the left side in your presentation. We also did kind of market analysis to kind of identify and only kind of invest in stock where we were expecting kind of a minimum return of between 20 to 35%, as you can see on the right side. And we did that also based on some of the data that we saw regarding positive improvement in consumer confidence and the job growth, and also the increase in the salary increases. We also identify a potential increase in technological advancement, and also in the sector of consumer discretionary and financial services. And we decided that in 2018, for the first quarter, or maybe the first 6 months, we will just monitor closely how our stock perform, and we might do a rebalancing twice a year, or maybe more if required or needed. And moving on, if you look at your slide, these are the performance. This is how our portfolio did in 2018. Essentially, the market was really volatile. If you can look at the graph on the right side on the screen, the volatility level was really high across different industry. And if you pay closer attention, the kind of energy sector didn't really perform that well. We had a return on investment of a negative 10% across the energy sector and across our stock, in the energy sectors. But however, we still were able to kind of sustain a positive performance of our overall portfolio. We ended up closing 2018 with kind of like an average monthly return of 42.27% compared to the benchmark, which is 45.15%. The volatility level, as I mentioned, was really high, like average volatility level was around 110%. And you can see those are the performance, how the performance kind of behave across between each quarter of 2018. Moving on for 2019, as already mentioned, at the end of every year, we kind of look into, after assessing the performance of our portfolio, we kind of look into how we can rotate our capital allocation between stock and potentially sells our least performing stock in order to kind of invest or inject that capital into the most performing industry. And if you look on the right side of your screen, you could have an idea of how we allocated, how we rotated, and kind of how we kind of rebalance our portfolio across and our stock across different industries. So obviously we sold the stock from the energy sector, material and industry sector because they were not actually performing that good. We decided to increase our investment into the technology and the consumer discretionary sector, as they were forecast in our analysis as the stock that we're going to kind of have a significant growth, like really high growth, yield really high return on investment. And if you look on the right side, on the left side of your screen, you can see that our average monthly return for 2019 was around 65.27% compared to the benchmark estimated around like 72.15%. And our volatility level, of course, was also still high. We also have like kind of the same volatility level as the previous year, around 110%. And so At this point, we were at the end of our first investment period, which were 2017 to 2019. In order to, we still have in mind like capital appreciation and income generation, so we decided to also conduct another thorough analysis and kind of develop some prediction for the next 3 years before rebalancing our portfolio one more time. So the prediction for 2020 to 2022 were as followed. So as an economic outlook, kind of we predicted kind of a growth in the GDP. We also kind of we were also kind of expecting a higher level of inflation. We also forecasted kind of economy recovery from the downturn of the COVID-19, which was in 2020, 2 years after the pandemic. About like the market trends, we also kind of predicted that we were going to continue to see a certain growth in the healthcare industry with different innovations around like research and innovation around how to tackle the COVID-19 pandemic. We also predicted a kind of boom in the tech sectors with the increasing availability of different AI technologies. We predicted challenges like some geopolitical tensions, and we also kind of predicted maybe kind of certain disruption on traditional business models, and about like our portfolio strategy adjustment. We still focus on how to mitigate our risk and how we were going to tackle any potential challenges around regulation, market regulation changing, and technological disruptions like supply chain disruption and across different industry based on the because of the COVID-19 pandemic, notably the supply chain disruption and so on. And moving on to the next part in this presentation, our investment strategy for 2020, as I mentioned already, was to select stock based on our forecast and prediction, and also conduct a more thorough analysis to kind of identify our investment opportunity. In investment opportunity, as you can see on the graph at the right side of your screen. So I also already mentioned, with the surge of COVID-19, we rebalanced our stock in the first quarter of 2020, and almost half of our portfolio were kind of reallocated into the healthcare industry, consumer discretionary, and technology. And now I will be moving on to how our stock performed in the second part of our investment journey. Let's move on. Regarding our portfolio performance in 2020, as you can look at those graphs, we can also have kind of high level of volatility across industry like consumer discretionary. However, those were also among, like that industry was also among the best performing industry in our portfolio. We register average monthly return of around 70.27%, which is a pretty good a KPI describing our portfolio performance. As opposed to the benchmark, which the performance was around 78.15%. The volatility level was also high across the industry that we decided to invest our portfolio in, to diversify our portfolio. Moving on to the next year, at the end of 2020, we also, after reporting on our portfolio and reflecting on how our perform, we also decided to see how we could come up with a new investment strategy for the upcoming year. And those were the prediction and the performance. This is what we did, how our portfolio did in 2021, as you can see. Keep in mind that we also rebalance our portfolio in 2021 as well, like adopting similar strategy as what we did in the past, market analysis, looking into the trends, interest rate, and what are the new market opportunities that we could take advantage of. So at the end of 2021, our portfolio the performance of our portfolio slightly decreased compared to 2020. We end up with an average monthly return of 69.27, opposed to our benchmark estimated around 67.15%. Our volatility level was pretty high, 130, because a lot of industry were not able to operate during the pandemic. 2020, some industry were heavily affected, heavily hit by the COVID-19, while new industries and new business models were emerging. If you can look on the right side of your screen, you can have an idea how we rebalance our portfolio for 2021 to get to those results on the left side. Moving on to the last year of our investment journey, we also did the same. We kind of analyze a bit and we weight our portfolio for the next investment year. And those analyses gave us this result as how our portfolio performed in 2022, as you can see on this slide. So as you can see, we kind of reduce the percentage of capital that we put in different industries, and we kind of also re-injected in industry that we saw that were recovering from the COVID-19. Sectors like real estate, where we previously sold our stock, we rebought some of the stock because the industry was progressively recovering. We also have like financial services as well among the sector that were recovering, and then we also invested in those in those sectors in 2022. And by the end of 2022, you can see how our portfolio performed within the entire, like the 3 years from 2020 post-COVID, during COVID and post-COVID, from 2020 to 2022 compared to our benchmark. Those are basically the money portfolio return versus the benchmark return. We end up with an average monthly return of 68.27% as opposed to our benchmark 65.15%. The volatility level was still high but slightly decreased, ranging around 121%. So overall, our portfolio did pretty well and exceeded our expectations. So based on different quantitative analysis that we did and qualitative analysis, our Sharpe ratio was calculated to assess the overall performance of our portfolio, and we got a Sharpe ratio estimated of around 1.72 or 73%, higher than 1, which essentially indicate that we had an efficient risk adjustment strategy. We initially expected an average annual return of 12% at the beginning of our investment. This is what we forecast, minimum of 12% to kind of 15% every year. We ended up with an actual average annual return of around 55%, which is pretty good. Basically almost 6 times than what we predicted. We started our investment with $100 million and we are closing the market cap of our portfolio is now worth $1.5 billion, which is a really good result. This was everything for this presentation, and please, if you have any question, feel free to leave a chat, or just kind of feel free to come up, and I will be happy to answer some of our questions, or if you need further clarification about something that I mentioned that wasn't clear enough to your understanding, I will be happy to bring further clarification. Thank you for listening. Yeah, see you in the next session. Bye.